Hello traders, Gary Wagner here, approximately 10:30 in Honolulu on Thursday, the 26th day of September 2013, and this is the daily report for gold and silver. Moderate pressure to the downside across the board in the precious metals markets, with platinum leading the way in terms of percentage losses on the day, down about 1.33%. Gold off about $10 on the day, or 0.70% lower, low 1318.60 and the high 1340.60. Current print 1323. Silver also trading lower this morning, but it's only off about a nickel, trading at 21.73 with a low of 59 and a high of 22.23 on the day. One of the contributing factors to a weaker gold price today is a strengthening U.S. dollar. When we take a look at the marketplace itself, and as we said, currently trading, well, now around 13.24, and that puts it off about $9-10 on the day. Out of that, you've got $5.80. This is from the Kitco dollar or gold index, and that negative is 580 is due to simply selling in the marketplace. But then when you factor in the dollar, you have another $3.30. And that's what's giving us this down day, both a strengthening U.S. dollar and selling contributing itself into the market. Now, we had a push-pull relationship between some of the news that came out. A jobs report, unemployment better than expected. However, we had another report, and that report was the gross domestic product for the third quarter, and that came in weaker than expected. So you got this push-pull, but we do have pressure currently on the precious metals markets, and it really comes down to the Fed, whether or not they're going to start tapering again in December, or whether or not it's going to be next year. You know my sense on that. Let's look at the technical aspects of the market. 1337. That is an area that we've identified as having some resistance, 38% retracement. Let's put a line across that. We can see that as this market came back up, and this is off of the 1181 low, this was really our first real level of real resistance. Came in, was unable to take it out. Market comes and begins to trade lower, finds support at 1277, a 61% retracement right in this area. And this is before we had that tremendous rally. That rally went from about, 1275 to 1434. You can see the top right in here. And then when we look at how this market came down, it finds its first real level of support, 1307. We talked about that last week and retested again early this week. Now, the market is sitting up near this resistance area under pressure. This, of course, is a Japanese average chart. And when we convert it to a straight candlestick chart, you can really see that the market continues to be under pressure. My sense is, barring any new fundamental news, we are probably going to come and retest this 1307 at some point. That would be my sense, because we have been effectively trying to take out this top. You can see these highs that come in here, but no cigar. It has shown to be very, very strong resistance, just as 1374 on this last peak showed to be some real strong resistance. So when we look at this marketplace itself, support sitting roughly at 1305 to 1307. First level of resistance is sitting at roughly 1337, with more resistance ahead at 1375. Now, another way to look at current support levels, especially that 1305 area, when we do a simple fib retracement from this most recent rally, meaning 1180 up to 1435, that's where I've got these bands at, and then we look at our 50% retracement. This 1330 is coming from a long 50% retracement, but this 50% retracement at 1308, and then we have another one at 61% at 1278. Those are the two key levels of support. We identified resistance above in terms of support. You've got 1305 to 1308, call it 1300, and then the next level of support below that would be 1278. That's how I read it currently. Now, we are looking at a daily chart, obviously in Japanese average format as opposed to candlestick chart. When we take a look at this $1,300 area, we can see quite eloquently the number of times the lows have kind of reached into this area, but not been able to effectively close below that, which to me signals really, really strong support at around 1,300. We've also, over the last couple of days, had very, very quiet activity. We've been absent from the market because my sense is that right now the market is really recovering from the last FOMC meeting, then the statements made following that, and is absolutely in an utter state of confusion because of the lack of clarity out of the Fed. You can really see these couple of dojis, whether we look at a Japanese average chart or a standard candlestick chart, we're getting a very, very similar read. My sense is right now, as long as we can hold 1,300, we are effectively building a base, and we might bounce to the upside off that base. However, real caution into the wind. Any kind of solid break below 1,300 really signals to me that we're probably going to head and test the support level, which is in the 1270s area. And you can also see this effective low as the market comes up and it hits resistance roughly at, this is 1335, the bottom of this is 1335, and then the market comes back down. This is that low that it makes. 50% would have taken it to 1263, so just shy of that, but then it comes back up, and this is where we find our current superlative resistance that I don't see it overcoming just yet. We've got a couple of boundaries to go through before it even hits that. But once the market came down, you can see that it attempted on many occasions to dip below, whether it was stop hunting. It dipped below, but it had enough buying power because there's really good physical demand right now to hold it effectively above 1,300. My sense is that 1,300 should hold. At the same time, I think it will effectively build a base. And if it effectively builds a base, we could see a bounce to the upside off of that. But we really need to see this market first break through 1335 on the upside. That's the real resistance point, or break below 1,300. Other than that, it's staying within this defined range, and it is fairly, it can be easily characterized, as a sideways trading market. Now, the key to me in terms of the long-term direction of gold, where it's headed, is that if we're going to get back into a bullish mode, there's absolutely no question, but we have to at some point break above this resistance line as we move up. If we simply look at a support line from these lows, and let's go ahead and blow that up, the other side of the coin is going to be the support. And the support trend line that I'm going to draw in is simply looking at this low here and this low here and carrying a line forward like that. And then we have the upper level resistance coming down like that. So my sense is, as we get closer to this apex, and it's not really a compression triangle by any means, but you do have an ascending set of lows and a descending set of highs. So as it gets closer to this area, it's going to pop one way or the other. Right now, the pressure has been to the downside, so that's what I want to be cognizant or careful about. But a break below this line is going to signal lower prices. Of course, a break above this line would signal higher prices. But one of the reasons that I have been sidelined is I simply want to see which way this market might break. I'm not afraid to buy or sell breakouts in the market or sell corrections, the beginning of a market as it breaks through a critical area such as here. But when we're in this very, very narrow range in which we are awaiting some sort of a move in the marketplace, my sense is sidelining might be the best advice I can give you. Now that, of course, is for trading. For physical purchasing, it's a completely different strategy, and we want to always be buying on the dips because we're holding the market for long-term gains. Now, when we look at our 3-day chart, and this is where I've added our bear count to the marketplace itself, it really seems when we stand back and look at it from a distance and we see this last rally and our current marketplace, it does appear, at least to me, that there is a probability, and a higher probability of it going up. There's a higher probability of the market moving down. Also, 3-day chart, if you look at the current MACD, the MACD, you can see that they look like they're about to cross and issue some sort of a sell signal in the marketplace itself. So we want to be cautious about this market. And as I said, I still believe that there is a significant opportunity that this market could find itself under pressure. And that, of course, is barring any new fundamental news that comes out of the market that would maybe shake the market up, such as the inability for the U.S. Congress or Senate to come to some sort of compromise or agreement about raising the debt ceiling. And then, of course, once we raise the debt ceiling, and I'm not saying if, I'm saying when we raise the debt ceiling, because it's the only way the United States will pay its bills, so it's pretty much a given that they'll do that. What does that say for our current state of our economy? So what does that say about silver? Well, my belief has been that silver, for the most part, 70 to 80% of the time follows the lead of gold. But although it follows the lead of gold, it will be, in terms of up days and down days, percentage gainer and percentage loser in terms of the amount of the move, but it still takes the lead from gold. If gold, in fact, breaks through 1305, 1308 in that area, I think that what we'll see in silver is a break in the same way through this current support level, 2164. And just as we have 1271 as the next level of support in gold, the corresponding number would be 2080 for the next level in silver. You can see resistance currently, I believe, is sitting at around 2248. This has been Gary Wagner, wishing you, as always, good trading. Talk to you tomorrow on Friday for the weekly wrap-up and review. Bye-bye.